This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. India's latest measures aimed at boosting domestic oil supplies could reduce its diesel and gasoline exports in the second half of the year, keeping global supplies tight and underpinning prices, traders and analysts said. The world is grappling with tight gasoline and diesel supplies as Western sanctions have reduced exports from Russia while demand has surged in a post-pandemic recovery. India's curbs follow similar measures taken by China that have reduced oil product exports from the world's number 2 refiner. In order to reap record margins, India, the world's number 3 oil importer, has ramped up imports of cheap Russian oil and increased oil product exports.
China extended record imports of low-priced Russian crude oil into June despite a lockdown-induced slackening in its total crude oil imports, squeezing out supplies from the Middle East and West Africa, according to tanker trackers and traders. Russia remained China's top supplier for the second month in a row, surpassing Saudi Arabia, according to tanker tracking specialists Vortexa, Kepler and Refinitiv. China is the world's top importer of crude, and Russian oil helps Chinese refiners keep costs down at a time when their margins are crimped by slowing demand from strict COVID-19 controls and Beijing's restrictions on fuel exports amid supply concerns.
Moving on to the top news in the energy sector.
Oil prices rose on Wednesday, clawing back some of Tuesday's heavy losses as supply concerns returned to the fore and outweighed lingering worries about a potential global recession. Brent crude futures rose by $1.43, or 1.39%, to $104.20 a barrel at 11:20 GMT. U.S. West Texas Intermediate, WTI, crude climbed 65 cents, or 0.65%, to $100.15 a barrel after closing below $100 in the previous session for the first time since late April. Both contracts recorded their largest daily drop since March on Tuesday on recession fears and other bearish pressures, which also kept a lid on Wednesday's price rise.
The British government said on Wednesday that plans to bolster the country's energy security, diversify away from fossil fuels and protect consumers from spiralling prices are set to become law. Britain's Energy Security Bill will be introduced to Parliament on Wednesday and includes 26 measures to reform the energy system and reduce its dependency on fossil fuels and exposure to volatile gas prices. Global energy prices have skyrocketed this year, particularly after Russia's invasion of Ukraine, which has led to many European countries trying to reduce reliance on Russian pipeline gas and seek cheaper alternatives.
Next, we have the top news in metal markets.
Recession worries and consumer belt tightening have hit demand for electronic goods, which is feeding through to weaker consumption of soldering metal tin, but output cuts mean the market is likely to be balanced this year. Expectations of large deficits had pushed tin up to a record $51,000 a ton in March, but since then COVID-19 lockdowns in China, soaring inflation and higher interest rates have seen prices roughly halve to 15-month lows. Part of the problem was funds cutting their bets on higher prices into an illiquid LME market, exaggerating losses, as seen in open interest on the London Metal Exchange, LME, at 61,205 tons, down from 75,885 tons on March 3.
The Bank of England said on Tuesday it will conduct an in-depth analysis to enhance surveillance of opaque commodity markets after Russia's invasion of Ukraine left the central bank without a full picture of risks and vulnerabilities. Just as the global financial crisis threw a spotlight on unregulated so-called shadow banks, commodity price spikes this year have rung alarm bells among regulators on the need to plug data gaps in the sector as households struggle with rocketing energy bills, stoking inflation. Heightened uncertainty following the Russian invasion means there is significant risk of further disruption to commodity markets, the BOE's Financial Policy Committee said in its half-yearly report on risks to Britain's financial system. We will now look at the top news in the agricultural sector. The U.S. Department of Agriculture, USDA, rated 64% of the U.S. corn crop in good to excellent condition in its weekly crop progress report, down 3 percentage points from a week ago and below the average of estimates in a Reuters poll. 12 analysts surveyed by Reuters on average had expected corn ratings to fall to 65% good to excellent. In a report released on Tuesday, the USDA also rated 63% of the soybean crop as good to excellent, down from 65% the previous week. Analysts on average had expected a smaller decline of 1 percentage point.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.